Trump tariffs. Do we have some danger ahead, or is this another dip buy? Well, let's get into it with our SPY slash QQQ weekly outlook and Sunday night video here. We'll try to do it in 5 minutes or less, as per usual. But we do have a few things to cover, so maybe a little bit longer here today. Anyway, so let's get into it. February 2nd, 2025. Futures are closed right now. I'm doing this video beforehand. But according to Weekend Wall Street, we are down somewhere in the range right now on ES of probably right into this area here, the kind of low from Tuesday or the close from Monday. Weekend Wall Street says NQ is at about 150. So right in that area. I think the Dow is down at like 44.1. So we're looking at a gap down here. Futures open in a few hours. And obviously the Trump tariffs are now, confirmed. This is the new regime, guys. So you got to have, if you're day trading, you got to be taking profits level to level. This is Trump. This is Trump's market. Day trading profits level to level. You got to have your stops ready, and you got to be ready to buy dips because there's going to be a lot of opportunities really all year long off these algo headlines. We're going to get flash sells, and then they're going to pop right back up, and vice versa. As of right now, we're down, but who knows? Trump could rage tweet at 3 a.m. and boost the futures right back up. We could wake up to a gap up, right? So this is the regime right now that we're in, and you got to be prepared for that. I want to take a look at so ES would be probably right around. I'm just going to say it's in the 60-20 area. I'm just kind of ballparking here. I don't really have the Weekend Wall Street for the ES, but they have it for the NQ and the Dow. Nonetheless, here we'll take a look at the levels here. So right now, dealer area that I'm watching, these are all from last week, so these will kind of be in the back seat. But right now, there is some put support at 510, so we're going to put that on there. So that's a QQQ area, and then after that, you kind of go down into the 505, that gap there. There is a technical level, obviously at the 505 area, and then 500 just below that. Again, just kind of retesting that previous all-time high, but leaving a pretty substantial gap there, and you have the 100 moving average down there as well. Those could be bounce areas, possibly even just intraday. After that, we'll have to see how the levels shape up afterwards. So I'm kind of going off of Friday's data. That's not including this gap down, but the 510 will be a level on Monday at least right away. I did already update SPY, and there was risk already even before the sell-off to 595 for Monday. It was smaller. Obviously, it's gained some interest now after the little swoon that we had. And then, of course, back to 590. That's also going to coincide with, guess where? ES. I'm just going to flip over to the other chart because there's too many lines on here. But right, there we go. So right back to 59.50. And you can see right there, that back test that breakout got back tested. We could do that again very easily Monday morning. So we're looking at two back-to-back Monday gap downs. You also have this trend line just below, and that is upsloping. So if we were to continue down, you can see it on SPY there as well. These are areas that could get tested. As you see 590 starting to connect with that trend line additionally. So those are big levels that we're going to be watching this week. I will point out and say COTs showing banks, again, kind of getting a little bit more short, the NQ and the ES. Not by much. Not by much. As you can see right there, yellow going down a little bit there on ES. However, the Dow and, more importantly, the Russell, banks are getting gig along while retail and hedge funds are getting short. So it's interesting, it's kind of an interesting dynamic here. So banks are going into the riskier index, which is the RTY, versus the NASDAQ. So that's an interesting setup here. And if we look at the IWM, this still has a pretty strong daily chart pattern. In fact, RTY, again, I don't have levels for over the weekend, unfortunately, but I'll just say right now, that inside bar there on the daily, as long as that's holding on a close, this is still a bull pattern to me. So I'll be watching the Russell. If we start to recover, the market starts to recover a little bit Monday, I'll be looking at the Russell here, possibly as a play on a recovery. This is outperformed here, and if this holds up and outperforms on Monday, I'm going to be watching this for dip buys here. Last area that bulls obviously would want to see go on the spiders is 590. I think we could really open up some serious selling if that level was lost, and then we could start seeing this 580, 585 area again. But again, there's that trend line there, and the faster we go down without any sort of bounces, the more of a V shape we'll get. So there will be some good trading opportunities here this week. But again, just be aware, guys. I mean, this is Trump's regime here, and you got to have stops in place. You also got to be ready to if you get stopped out, you got to be ready to rebuy on those reclaims too, because this is the type of market. It's going to be volatile. Like I said, we gap down, 500 points on the Dow. 3 a.m. he could rage tweet something, and then we wake up and we're green. So this is the market that we're in now, and you got to be ready for these moves. And it's a little frustrating. Can't even make yourself lunch, in the middle of the day. You got to be on top of stuff and make sure you're taking profits level to level, because you can get wiped out pretty easily. But you know what you're doing. This is a very, very profitable market to be in. So anyways, guys, I'll wrap it up here. Again, don't forget to come find me on carnivoretrades.com. Subscribe to the channel. You guys take care, and I'll see you guys all on Monday.